Hello, everyone. As we head into the long weekend, stocks basically are holding up pretty well following our sell off on Wednesday. Thursday, stocks obviously gapped down a little bit, sold off, and then they were able to put in a low around early morning, midday, rally the rest of the day, and actually close near the high, actually at the high of the day on the NASDAQ and near the high of the day on most other indexes. The NASDAQ was up 0.10%. Volume was lower than the session before. The NASDAQ 100 was up 0.07%, closing near the high of the day. Volume was lower than the session before. So overall, we still see no accumulation. You can see in the Qs, where is the volume at all this week? Very, very low volume, which is good considering that we're pulling back this week. We actually finished lower on the week in the market. So, not bad at all. If we look at the bigger stocks, the Dow Jones Industrial Average, you can see slightly higher. NYSE slightly lower, and I know you see heavier volume on the NYSE and S&P 500, but Market Smith had volume slightly lower. Not sure what Bloomberg had, didn't look, but I could say that it's pretty much flat compared to the day before. And overall, good positive price action considering that we didn't follow through with more heavy selling. If you look at the SPY, however, and the Diamond DIA, you get another pocket pivot point signal, but once again, since the February lows, wow. It's impressive that we can rally like that on no volume. I got to admit, bearishness got high, but this V-shaped rally has definitely gone further than I thought it would on lighter volume than I ever thought was possible. So very impressive. The Russell 2000, same similar situation, but it was the strongest index today, up 0.30% on IWM. The Russell 2000 actually was up 0.36%. But as you can see, the below average volume continues. So it's nothing to get too excited about yet, but so far, the pullback's going well. Let's hope that it continues. IYT is the only index that's had any accumulation on the upside. So far, so well. Like I said, we'll see if this continues. Now, with the actual early morning, unfortunately, considering the sell-off yesterday and considering that I'm extremely tight with my stops. This volatile tape, the V-shape moves, the low volumes, the imperfect signals is keeping me very tiny when it comes to new long positions. I'm keeping my losses very tight and my dollar loss amounts very low. There's some positions I treated accordingly, like 1% for being in this scan, but because like stuff like NADL, the position was just too large, even for 1% for the dollar amount I'm willing to lose. I run about a middle six-figure account, about $500,000. I refuse to lose more than $200 on a position. Due to slippage on NADL, I lost more than $200 because I oversized what I thought. It was a great pattern. I really thought it should move, but for really to have done a full-size trade, NADL could not have been up more than 10%. So the fact it was up 19% and I still took a full position just shows the error in calculating the correct size in this kind of tape. But, I'm learning my lesson, and it's no big deal. So today I'm going to go over the sell signals first off. SWHC is a 50% sell because it's cutting through the 20-day moving average on very heavy volume, ugly price action. That's a 20% or 50% sell. NORW on an end-of-day basis is a 50% sell. I got taken out so viciously. Because of the great fill yesterday, I should have put the entire sell stop at 982. Instead, I tiered it into threes. A penny move below 982, a penny move below 973, and a penny move below 956. This thing gapped down, traded light volume today, and I got absolutely ripped off. On my final sell stop, I actually got the low of the day. So a third of my order went off at the low of the day, and that's just the way it is. So even though this was only 3% position, and technically I was only risking, I would say, if we even went down to these lows here, look at what I would have been risking. At worst, 2.5%. So on the total position, I risked less than 2%. Thanks to the slippage, I got the 2.5% loss on the 3% position, allowing for a 4 times greater dollar amount loss than I figured I would take if I was wrong. And that's why with this market, you got to be careful. NORW, 50% sell, end of day basis. XRS is also closing below the 20-day moving average on below average volume. So it's a 50% sell on an end of day basis because it's closing below the 20-day moving average without having any current gains. So since our long signal to now, we actually have a negative dollar amount. So 50% sell signal with the move below 50.11. My final sell signal remains right here at this low a day. And then unfortunately, MXL, another stop knocker outer. I had, once again, 3 stops. One below this low, one below this low, and thankfully one below this low. 1578. You can see it came close but didn't hit it. So I still have a third of my MXL, but MXL is a 50% sell signal, and BAK is a 100% sell signal. I was out at the very opening bell on this one following its ugly reversal. But the fact that a nice leading stock can look this good and takes as long to move up from February to March as it does, and then takes only 2 days to destroy 18% of that move, tells you all you need to know about the current tape. You got to trade it carefully. And also intraday, I got knocked out of some names. EBIX, I got knocked out of all of it. PACW, I got knocked out of 50%. And FSLR, I got knocked out of all of it. So now I'm going to set buy stops. With FSLR, buy stop will probably be reset at 74.29. I don't think I want to do 71.57, but I'll consider it if it stays tight at the 50-day moving average. But for right now, if it starts to rebound off the 50, I want to get long with the move over 74.29. It's okay. It happens. PACW, it'll be the same thing. If it gets above 37.53, I'll reinitiate the stock that I just got knocked out of. And EBIX, based on the way it's trading, if it can find support here, rally back, obviously I'll buy it back with the move above 41.64. But hopefully here it can move more sideways and give another pocket pivot point signal. And if the market stabilizes, I'll look to even go heavier into it. But overall, there's some stocks considering a buyback. GENC, man, I got knocked out of half of it here, added it back here, got knocked out of half of it, I guess, intraday right there, because then I would have moved my final sell stop below 1309 because it closed below the 20-day moving average on above average volume. It was fine, so is Max Green Bop, and today it's holding that 50-day moving average with Max Green Bop. On this one, my buy stop will be right above 1399, so if it hits 14, I'm back in on what I just sold off. But besides those buybacks, I have no interest in any other new long position. I want it from now on in a new signal. If it's more speculative, I have to see it touch the 20-day moving average, preferably producing a pocket pivot point signal, preferably with the 10-day moving average with a 20-day moving average. Just want to show you some stocks that I flagged, no new long positions. ELLI, that's a nice, well, not really nice, but it's basically a saucer with high handle pattern. So I'm waiting for a signal here. This volume surge isn't good enough for me. The good news is it's touching the 20 and 10, but is the 10 above the 20? No, so it's not right for me. ABCW is another interesting one, but that base is a little too loose for me, but nice pocket pivot point signals. It's now completed a right side. If it can make a handle, awesome. If not, no big deal. DLA showing up again. Flagged it back here on the 18th. It's too thin for me. Flagged it back here. Flagged it again today. But it looks coiled for a big breakout. It's just too thin for me. EW, nice move. Overall, no problem. But once again, is that 10 above the 20? No. So with this move, especially with the nearly just average volume, no interest in going long. And then on the speculative names, PLG, nice move. Where's the 20-day moving average? Not touching price. We'll keep it on this one. CBD, nice move. Where's the 20-day moving average? Not touching price. LXU, nice move. Pocket pivot point signal. Where's the 20-day moving average? Not touching price. SUI, very nice move today on huge volume, but the stock is below both the 5, 10, and 20-day moving average. No interest. However, the huge surge in volume and BOP has got my eyes open, and I'll continue to be watching it. Also, SPIL, great breakout, but really now I need to see it flatten out. Let that 20-day moving average, 200-day moving average start to trend higher, get close to the 50-day moving average. Hopefully price can pull back to it, hopefully with green BOP, and I'll look to get long. STV off the lows, not bad, but didn't close near the high of the day, and with it being a Chinese stock, it's kind of crazy little player, but you can see at least the 5's above the 10, 10's above the 20. It's just not my ideal long position off the lows without it having amazing fundamentals and not being sketchy. STV is very sketchy. GGB is another gold stock. Nice move, but the 20-day moving average, not touching it. HIFR, better, but once again, 10 days below the 20-day moving average, no interest. But as you can see, on a day where we went nowhere, quite a few little small names that making some moves that were interesting, and bigger stocks like EW. However, for me, there are no new long signals, no new short signals, just those sells I went over, with BAK being the only full sell. So far, so good. Patience is key. Like I said, if EBIX can continue to consolidate, you can see that now the 20-day moving average is caught up. Maybe if you consolidate, get this 5, 10, and 20 all coiled up, maybe it'll produce a pocket pivot point signal, and we'll be able to get some size in some of these leaders. But for now, range-bound market, cash is still preferred.